Welcome to another episode here at MVP Charts.
And as a reminder, guys, these are all trade ideas for entertainment purposes and not financial advice. And remember to hit the like and subscribe button, as weekly videos like this are coming out consistently, along with more educational content throughout the week. Now let's dive into these charts.
Okay, so your highest time frame as a day trader is going to be the 15 minute. That's going to be the highest time frame you look at as a day trader, which will give you the direction for the day. We're going to look now, we're going to start with SPY. We're going to start from the beginning. So we're going to go to the day. We're going to go to the day to see how today ended. So then we see today's candle. This is today's candle that rejected yesterday's low. Today's candle rejected yesterday's low. So since it failed to move above where it closed yesterday, then you can bet to the downside. As a day trade, you bet down to the downside. So now with your levels already established, we have already our levels established. So we're going to go to the intraday. The intraday, we're going to go to the hour. The hour gives us a more clear direction, meaning in candles it's less noise, it's more clean, it's a clean direction. So notice here we rallied, we based, and then we dropped, we tried, we didn't have enough strength to continue, so it did a lower high to this did a lower high to this. So we're just doing lower highs. This is a sign of weakness. This is a sign of weakness. So if you were to enter a short around here, because you see that it failed to move higher and above this previous high, and not only that, but you also have here a level. It's rejecting your level. So as long as it rejects your level, you can buy shorts, you can buy puts, you can buy puts, because it's rejecting the resistance that you needed to break. If this breaks, the goal is to pass this high for a move higher. If it fails to take out this high, then you expect this type of move afterwards. Okay, so now we're going to go into the 5 minute. We're going to go into the 5 minute because we want to find an entry. Okay, so we want to find an entry. We're going to go into the 5 minute. So this is today. Let me highlight the pre-market. So to highlight the pre-market, you can go to the settings gear. You go to options. Sometimes you have to play around with it. It'll depend. It varies. You can either change it from equities, options, or futures. So let's try equities first. Highlight extended hours trading session, and then apply. So then you see how it highlights the after hours and the pre-market. So let's go with today. So today we see the pre-market come up into resistance, come up into the resistance lines, and you see it reject, right? You see it reject and it comes down. The market opens. It does this green candle. Let's go down to the 3 minutes. The 3 minutes. Okay, so the market opens, right? The market opens and it gives you this green candle and then gives you this red one. Now this red one, it's a rejection, automatic rejection. This green candle, had it had strength, it would have continued up, but it didn't. It automatically stopped and then rejected and came down. We're still holding above this trend line, which as long as we're above, we do not buy any shorts. We do not buy any shorts as long as we stay above. Unless you're quick, you get this scalp. But that's when you guys have the experience, then you guys can anticipate these, and then you can risk by entering here with the goal of breaking this line and then catching this entire move. But as of right now, your safest entry would be a clear rejection here. Why? Because we have this high here, right? And then we have this lower high. So if we connect these two highs, and then I extend it, then if I see this coming up and doing this, I'll wait. I'll wait and I'll see what it does here next. As it comes down and then rejected here, these two established my trend for the day, at least for this time being. It established this. So I wait for price to come up here, and then I'll be expecting a rejection as it does lower highs. So as it does lower highs, I'll expect a rejection here. Notice we see these green candles, a strength, and then we see these small red ones would be good. And then had we had one of these green, that would invalidate the short side because it now broke above your trend line that it should have rejected. So if it does this move, then your short no longer is valid. But in this case, it rejected. It rejected the trend line and it broke below where it says reject by puts, your actual trend line. So here, as you see this try to come back up and reject, this candle here could be your entry short. You enter around here short, or you can risk and enter around here short because you already know it did lower high. This high is lower than this high. This high is now lower than this high. So as long as it keeps doing lower highs and stays under this trend line, you can bet to the downside. So now you enter short here, right? You enter short here based on this rejection. And then your primary goal will be this level right here. It always tests the first low that it does at the open. So if it drops this low and then it starts moving is here, you can count that it will come back and test it again. It will test it again. So once you see this drop here and then bounce, you can mark this as the low for the day, and you can mark this as your high for the day. This is the range you are trading for the day. This is your high and this is your low for the day. So high, lower high, lower high. You can take a risk here to the downside. This hasn't been tested yet, so you can enter short here with this level being an exit as in target. So if you set this as a target, you can automatically get a $2 move on this day trade right here. You enter here, you enter here, you exit here. And that's a day trade right here. $2 move. Now, when this drops here, there are buyers that probably have levels here and they're waiting for this move. So as they wait for this move, they get this move up. They made a $3 day trade move, but they were already waiting for this level, just like you were waiting for this level. Another day. Look at this day right here. This was Monday. So Monday we had our levels established already. Monday we see it reject, reject, and then we're here. And then it tries to come back up again. So notice how you can label this pre-market high. You can label this your pre-market high, and your goal is for the pre-market high to break above. So it breaks above the pre-market high, and it closes. Notice how it closed the candle. So now you got to look for an entry anywhere above this level. You can grab anywhere around here. Anywhere around here you can get in. As long as it stays above this level that it was failing, it was rejecting at first. Now it finally was able to get above. As long as it holds above, you can catch this move. Buy calls. Buy calls. You have a target up here. Make that your target. Get as close as you can to it. You see? That's your day trade right there. So you just have to, it's more riskier when you're day trading because you have to be more patient. As soon as the play goes against you, you have to cut it. As soon as the play goes against you, you have to cut it. For example, if I go in short here, for example, if I go in short here, and then my goal is I have to make this my stop. This has to be my stop. So this being my stop, if price gets above here and breaks above, I need to get out. I just need to take my loss and cut it, because then this is going to continue its way back up, and that just invalidates my short. So when it comes to day trading, it's going to be very, very, very critical you stick to the plan. If the plan goes against you, you must cut it and take the loss. That's the reason why you try to get the levels you try to get your entries at the extremes. At the extremes. So if you see the market dumping, just let it dump and wait. Just wait to see where it finds support and catch the bounce. Just wait and see where it catches the bounce. It's very, very critical that you follow the plan when you day trade.